Hello everyone, Kay with Zuna. The theme of this video, or what I want to focus on this video, are techniques that are always in effect and most traders should be aware of them. A lot of traders are specialized in one or two setups, and they're able to pretty much make money just by mastering a couple of setups, and that's great. Uh, but to become a well-rounded trader, you really need to be aware of key support and resistance areas. Whether the support and resistance that you prefer to use are traditional SR levels from swing points, or if you're using pivot points from as in daily pivots or floor pivots, weekly pivots, monthly pivots, etc., or if you're using MP, market profile support and resistance, all of these three techniques are used widely and they're respected, and because they're used widely, the markets tend to react to that. So you do need to be aware of them so you understand what's going on. Why did this happen today, and the prior day the internals showed this and we had something else happen? And a lot of times it's because of where support and resistance is at. For example, let's look at today's opening. Internals very strong enough to go ahead and go long right after the open. But but if you went long, you would have gotten stopped or got stopped at a break-even stop. So what was so different about today? Why did we not just take off? Or why didn't everything work out exactly as we wanted, as it should have, or your indicators said they should have? For example, SDI2 gave us a reversal signal, okay, a bullish reversal. So we put in a low on YM, we come back to test the low, let's go long. Why did the markets roll back and stop us out? Okay, these lines that I have on my chart, the white line is traditional support and resistance levels from swing points. The grayer lines are the value areas from the prior day. Value high, value low, and point of control. Value high, value low, and point of control. The value low coincides with this white line also, which is just a traditional SR level. So again, going back, why didn't the market take off? Well, let's look at yesterday's price action. Okay. Yesterday markets try to rally up to this point, put a high. Why did we put up a high there, and after that just failed to move beyond it? Buyers just were not interested to come in this area or beyond this area. Okay, so we obviously have these two white lines which I have drawn, and I'll show you where I got those from shortly. But these are key levels, both of them, and it's not hindsight observation, but it's as we go back in the charts, you'll see it's quite simple to draw these lines. Well, let me show you where I got those lines from. I actually have to change my intervals so it makes sense. Let's look at a 15-minute chart so we can see all the data. This was actually the last bullish reversal we had, which made for a decent swing point, but we did get our trailing stop picked once the market reversed. When markets are making lower lows and lower highs, okay, once you make a lower low, the prior lower low is going to become resistance if we try to move beyond it. For example, if this would have been resistance, because this is the next low, okay, but as you see, the market's gapped up, and this is why that other bullish reversal worked beautifully, because we gapped up above resistance, okay? So that's why the markets just took off, because we didn't have much resistance. The next resistance was here, okay? So you need to be aware of these key points. As you see, once the market came down to this line here, it respected it. How do I know it respected it? Because it just hung around here, and you see these long shadows. This line tried to push through it, and it couldn't close. Okay, we try to hold it in YM, we try to hold it in ES, but eventually we couldn't, and we pushed down. And so now you need to, you don't need to, but it's wise to be aware of these levels. And you need to trade your trade plan in context and not get tunnel vision. This is how you'll know why sometimes the setup works and sometimes you struggle with it, because there are other variables that will affect your setup. And support and resistance levels, I highly recommend, if they're not a key part of your trading, just be aware of them so you're not going long right into resistance or going short right into support. That's when the market will move sharply against you and you sit there saying, why did that happen? Okay, going back to the 1 minute chart, I showed you where I got those lines from, the horizontal white lines. Now the interesting thing is that there's a confluence of resistance. We have the value high, the value low from this day, which is the prior day to today's session, which already finished. But yesterday, when the market rose up here, not only did we have that SR level, the white line, but we also had the monthly and the weekly pivots. Okay, on ES and YM, just so I don't have to change symbols, but YM is also, the pivots were also in the same place, excuse me. So you see that we have a confluence of daily pivots, traditional SR levels. Okay, and today when we opened up, we did not open up beyond. If we had gapped up above this, then I would be happy to buy the pullback to it. Same with ES. So even though the internals were very bullish, it was just not a smart place to go long into resistance. Okay, now what we'd want to see is price move above this and then come back and then buy the pullback to these, because now these will act like support because we've broken them. So when you see situations like this, okay, have a little bit of patience. Okay, that's what the market actually did. Buyers just stood on the sideline, price moved down, and if you're familiar with market profile or auction theory, you know that when buyers are not aggressive, then you want to wait for a discounted purchase. And no wonder we came down and tested the value low. This is where longs perceived value to be. We came down, we bounced off of it, we came back down again, and market took off of value low area. And to show you how important this line, this support level, which was resistance, is, notice how we came back down to it and how we're bouncing off of it. Okay, so just by knowing support and resistance levels, that is to say key support and resistance levels, being able to distinguish those, your trading will improve significantly, because you will filter your trades based on key support and resistance levels. Once the SDI1 lined up with SDI2, this is very strong. Notice how you could have confidently purchased here or went long here off of support, or if you use other methods for getting long or short, you could have combined it. From this point on, right there, actually the bar after this is the market's line, the two indicators lined up and showed you that the bias was to the upside. We didn't make higher highs. However, you would have made successful trades, making a couple of longs here, one and here. If this morning area, for those who don't have a lot of experience with the SDI and SDI2, would have been a very hard trade to go long here. Okay, but if you have some experience with SDI1 and 2, and you will be very confident with the reversal signals, just because you have the experience with it, you'll be confident, and combined with some support and resistance levels, you could have easily gotten long either here or here. This would have been safer, and the reason I say that is because I was watching in real time how volume breadth was coming, and I didn't want to see it go below the 0 line on either ES or YM. And once we made the second low here, if you look at the charts here, once we made this low, YM did not budge, did not make a lower. ES did, but YM didn't. This would have made a safe trade with very acceptable risk, very small risk, and you would have gotten a nice move out of it. In fact, if you want to make a swing trade out of it, you could have, depending on your judgment. So that's That's the way I would suggest combining SDI1 and SDI2, volume breadth, and obviously key support and resistance levels. Be aware of key support and resistance levels regardless of what indicators you use or what your trading strategy is, and I guarantee that your trading results will improve significantly, and so will your confidence in understanding price action and why it did this and why it did that at this particular point and at that particular point. Very good. Thanks for watching. Talk to you guys later.